What's up, everybody? Good morning. Good morning. Good morning. Sorry about the late start. All right, guys, belong up to DD band. Oh, very nice. Okay. I'm probably going to miss out on this one, too. Happy holidays, everybody. The Wednesday before Thanksgiving. I'm sure most of y'all are out seeing family or doing something at home. Or wait, don't forget to smash the like button, friends. Give us some love on the stream today. Let's take a look at what's going on. Stream should be good now. Now my computer literally reset again, like in the middle of talking. Something I need to change out my components. That's what I need to do. Welcome to the show. Everybody, take a look at what's going on today. This morning, look at large earnings today. Nothing really big going on there on the calendar. Let's say we have the this morning. Happy Thanksgiving, y'all. Happy Turkey Day. I'm gonna drink a Celsius today. It's the first time I drink a Celsius in a long ass time. So I'm gonna be a wild child this morning. You have to put up with me. But I was running late. All right, we're talking about the jobless claims today. Oh, we did have, these came out because of the holiday. Then we'll try to take a look. BLU to DD band. Pretty simple setup today. VIX has no pivots in the way as well. So VIX has nothing to stimulate any volatility. Looks like going straight to DD band. It's probably going to call it right out the door. 60 to 80. 455, yeah, so there's still some room there, plus some gaps to be filled, so I probably should have got in on this, but I missed it because my computer reset. Are you drinking a bang for the first time in a while? Dude, we're gonna be like twitching together in about 30 minutes, just like tweaking, you know? Bangs are crazy too when it comes to like as much caffeine in them. All right, so everybody knows today it's a pretty simple setup. You have belong up liquidity map up here to next resistance DD band. That's it. Resilience greater than 0, supporting at the box, right? So we got all of this, right? Resilience. Pretty simple setup here to here, day's over. So we call it a small day anyways before Thanksgiving. I would trade it right up to here and call it. That's it. Looks like DD band break on the outside on NASDAQ. So a pretty nice, clean, easy bull setup today. Don't forget, friends, hit that like button on the stream and make sure you subscribe to the channel. Give us some love. Already subscribed. Ann Elizabeth, you've been subscribed since, geez, oh, you've been here for a while. Let's see, Ann. I would say probably 4 years at least. Ann's one of the OG'ers from the old days. Hella OG. Okay, QQQ running up. Let's look at monthly maps. See what we have here. So we were investigating something last night on the data pools. So we're having something. We're opening up a ticket for the opening delay that we get sometimes to look at it. So we're going to see what monthly maps look like in SPY. And it had to do with monthly maps, so. Let's see. Jumping long. It's already over. It would have been from here to here, and I know I was running late and I missed it. I would have loved to have gotten 15, 16 points right there. Let's see what we get here. All right, ready? Okay. Sorry, just chilling here. All right. So, initial jobless claims. what initial jobs claims are, it's not like people that are just not working because they're not working. Like, this isn't like, you know, lazy people don't want a job or whatever, or, you know, like, I don't know. This is competent work. Essentially, a jobless claim has to do with you filing for unemployment when you get laid off from your company for non-performance reasons. So an example is that you got laid off because they're downsizing. You are a competent worker who wanted a job, who made a salary, who got laid off not because you did something naughty, like you were stealing from the company, or, you know, you got caught banging someone in the coat closet or whatever, and they laid you off, or they fired you. You get fired, you can't get unemployment insurance. You can't get unemployment. So you have to be laid off for non-performance reasons, right? This is not just people who are unemployed. It's not like the welfare type category is in here. This is, you were working and you got laid off, and you're probably going to go back and try to go back to work. That's an important metric in this data set here. Yeah. So like, this isn't your, you know, your fentanyl addict twitching on the side of the fucking street. This is literally like people that were working got laid off, and yeah, you're in this data set. That's the important part. This is available labor for the labor pool. People that just got thrown back into the pool. This initial jobless claim is you just went and filed. And usually when you get laid off, you're gonna go file. You're gonna literally sit in your car, right, and fill out the application probably before you even drive home. That's how quick you're gonna do it. So now imagine that this particular thing that comes out every Thursday morning is gonna help you predict what the Fed's gonna do. That's the important part. That coat closet has stories to tell. Oh, you know it does. And so the information here is very important, because these are people that got laid off who want to be working, right? It's not just the unemployment. And that's very important to understand the cyclic form of labor and what the Fed's going to do. Now, inflation is a big part of what the Fed, you know, is caring about. And the mechanism for inflation has everything to do right now with wages and the cost of things. The cost of things are going up. COVID created this or the shutdown at COVID created this entire dynamic where everything's expensive now. And we knew it was going to happen. They told everyone our stream was going to happen. We're like, you know, this is going to create inflation for a long period of time. So we're dealing with that, okay? And when you lay people off and they're desperate to get a job, they'll take a lower wage because of competition. These are things we're going to talk about now. If you can see that wages are going to come down, you can predict that inflation is going to come down. So you can use the combination of the initial and the continuing jobless claims to kind of predict, that's the 4-week average, to kind of predict what the Fed's going to do, because the Fed is telling you what their motivation is. Their motivation now has everything to do with straight up inflation. That's all. And their motivation for inflation, they tell you, Jay Powell's been telling you for years, it's all about labor and wages. Like, it's a big part of it. And now there's other secondary and like tertiary effects that are leading to inflation. But the initial mechanism for inflation was wage inflation. Just give it a little cool way to read this. Again, economics is fun. Everybody put the fun back in fundamentals. And I know it's the lamest thing I've ever said. And if you want to unsubscribe because of that terrible dad joke, please, I don't blame you. I'd run. Now PMI is coming out. So here, continuing jobless claims are people that are continuously or continuing to file. So usually with unemployment, you have to file, and every week you have to submit an application that says you have a questionnaire from the department, and the questionnaire is like, I did it when I was in my 20s. I got laid off, remember, and that turned me into trading. But at the time, I went through the whole process. Every week you got to fill out a form, and it's like, you testify. Are you working? No. Are you looking for work? Yes. Have you applied to 3 jobs this week? Yes. And you have to fill out this questionnaire. And then they say, congratulations, you get your check this week. And so every week you have to resubmit to make sure you still qualify. And now you're in this category, continuing jobless claims. It means you're still filing for unemployment, not the initial wave. You're the people who are still filing. So it's like 2nd, 3rd, 4th, whatever week. And I forget how many weeks you can get it. So you have to reapply. It's like 3 or 6 months or something. It's been a long time. And so anyways, these are the people that are continuing to file. So this is your job pool of people getting laid off that first week who still can't get a job or can't go back to work. So back to the 2 data points, we're going to predict what's going on, right? So you have waves, right? People are getting laid off and then not laid off and laid off and not laid off, etc. So the initial waves of people getting laid off are like diminishing. So over that period of time, as you see, those waves of initial start to pile up as 3 or 4 waves of layoffs since September of 2022 has led to more and more people not able to get a job, outpacing the available jobs. Now, if you go look at the JOLTS, which is a monthly report that comes out, you'll see that the JOLTS were actually trending down, right? So from here to here, available jobs are trending down as available labor was trending down, which means all these unemployed people start coming back to work as early as May of 23. So essentially, at some point in time, everybody wanted those crazy high wages after COVID, right? You people are getting paid double for like half of the output. You would go to Zoom calls in your fucking underwear and get a salary that was double what you made the year before. Imagine that crazy world. Well, we all contributed to inflation. Now it's the problem we're dealing with now because of that mechanism. Price of goods and services went up from the shortages of COVID. We demanded more money for the risk we took going to work during a pandemic. And then all of a sudden we got paid more and shit went up and things cost more. And now we're paying the price. So now the way that you control inflation, what's called cost push inflation, which is that type of mechanic, is you scare the stock market enough by threatening interest rates and quantitative tightening, and Wall Street starts firing, or starts trading down, and companies start firing people, and it slaps everyone in the face to where, you get fired in waves, and all of a sudden your bills are piling up, and you used to make 100 grand, now you make 180 grand, and you got fired, and you've been looking for that 180 grand job, and nobody's going to pay that ridiculous salary anymore because there's more and more and more labor available. Competition's high, and supply and demand brings wages down. You'll take less of a wage to get the jobs, you can pay your bills. And so people were like, fine, I'll take 150, 130, 110, fine, I'll take 100, that's what I made. Okay, 90, I'll take whatever, I'll take less than what I made before, just give me a job. And then that mechanic is what caused this to come down. People are going back to work. People going back to work brought wages down. If you put the CPI right next to this, CPI matched exactly here. Let's take a look at the PMI, I think just came out a little second ago. Or is it PMI? No, what is this morning? Michigan numbers. So anyways, we're this mechanism where wage inflation, the front end part of inflation has been coming down. But here's an interesting phenomenon, right? Right about, September or so, these numbers started ticking up pretty high, continuing jobless claims. And the initial has been kind of steady. So it's a weird thing that we're not getting like a huge massive wave of layoffs, but the people from May, June, July that were getting laid off here, they're not going back to work as fast. And that's the problem. The layoffs are normal. Companies aren't really laying off as much as they are, but the people that did get laid off back here are not going back to work, and the little bitty layoffs are piling up on top of it. So this is a very strange mechanic that unemployment's going up, and JOLTS are also upticking a little bit as well. Jobs are being created, and there's people available to fill them, yet this is the strongest ramp up in continuing jobless claims that we've seen since September 22. And when you look at this, you have to ask yourself, why are there more and more people getting laid off when there are more and more jobs available? More and more people unable to get a job when jobs are available. It's not like we're going through seasonal waves of layoffs. This is very mild. So you have to ask yourself, there's some kind of mechanic. Are they just unqualified and there's just a block? The company wants to hire people, and these people are like, hey, we're available to work. We've been unemployed for a while. Give us a job. And they're not matching up. Weird environment we're in. And so what happens is if companies want to hire people, they'll stimulate by paying them more. If there are more people that want a job, the competition will bring wages down. So it's like those two mechanics are not going to battle inflation. That's the problem. The company wants to fill a role, they're going to try to pay more money to steal the employee they need, right? So the thing was, if JOLTS were going up, available job openings are going up, and unemployment filings were going down, or continuing jobless claims are going down, then that means the hiring spree, companies were hiring people fast enough and they're able to pay lower salaries, which would bring the CPI down, yada, yada. Inflation would come down. When inflation comes down, the Fed's likely going to have a less heavy hand on the market. This is a weird environment though. Stocks are rallying all-time highs. Companies are going on a hiring spree and there's nobody available to work for the job they want. So either A, the workers still want more money because of inflation, they need a bigger salary and they're holding out for longer. That's the disconnect. Or number two is labor mismatch. People either, those jobs available could be tech, and those people unemployed could be teachers or truck drivers or something that's not tech. It could be a mismatch where you just can't fill the role because the available type of labor is not there. So anyways, the environment we're in is very weird, and it's hard for me to get a grasp on what's going on with this. But the way that it looks like is that it's stagnating the numbers. And so the CPI, as we know, has been coming down and been ticking up lately as well. The battle against inflation from wage inflation coming down is not going away because there's no competition for the job. Jobs are available and people are available. Supply is high on both sides. So the CPI is ticking up because of that mechanic. And when the CPI is ticking up, one can only assume that the Fed is going to still press a little harder on rates. So maybe the next meeting might be a rate hike. You just have to think of things like that. So that is the world that we live in, y'all. Hit that upper DD band. Market's selling off the hedge pressure. Really not much to say here, but other than just kind of a sit out day. If you longed from here to here, you did a great job. If you took a short from here to here, you did a great job. This is the two pivots today that are worth talking about. It's Thanksgiving. I wouldn't do a fucking thing after this. I would call it a day and go on your merry way. Anybody take a trade today? Longs, shorts, which I'll do. It's a classic BLU. It was a pretty easy setup. Kill it, guys. Kill it. Guys and girls, I do it. Jesus, took a short near the top. McDermott, 2 evals from long. The DD short. Rowan, killing it. How are you doing your evals, by the way, Rowan? That's your first one, right? Man, I love seeing people come in here and just start learning how to be patient and mark up your trades and wait for them. And you came in crushing evals. That's what I love to hear, man. 100 points in Q live wire, killing it. Long the over quick 5 points. Short at ES and DD. Long hedge pressure DD. Man, you guys are killing up 50%. No trade. I was too slow. I was too slow too. Fuck my life. Okay, but like day is over. Like right now, I wouldn't do anything for the rest of the day. We have index divergence with Nasdaq pulling back a little bit. Like honestly, I just call it. Check out this QQQ monthly map. We'll just go quick on this one. It's a holiday. No stream tomorrow, ladies and gents. Being, you know, obviously Thanksgiving. What we're gonna do is we're gonna take it easy today. I'm gonna go make some breakfast, make some coffee. We're talking about monthly maps, queuing and caching. There's one thing's happening with the monthly maps at the open. It's coming in late, and there's a little hiccup. We're trying to figure out why. It's coming in late. It's the communication with the server, and we're trying to figure out something with that. Monthly map still strong and bullish. Bull longing more, bears shorting less, covering. So this is still double bull pressure to the upside, at least on the longer haul. Good morning, everybody. Using the 50K evals and Apex, they're 90% off, pretty easy compared to the others. Nice. How many do you have, Rowan, and what's your strategy? I know we talked the other day, right? You pass a couple evals, you keep them on stockpile, probably trade one when you get funded. Stream Friday or bad idea for short days? Not a bad idea for short days. I just won't be here Friday. I'm gonna go out of town for the weekend. Happy Thanksgiving, Barb. What's up, girl? Thankful for Matt, the RS community. You make me happy. So sweet. Well, thank you very much. Thankful for you guys coming here every morning, listening to me ramble on about getting busy in coat closets and shit, and having a fun way to teach fundamentals. We make economics fun. Short holiday stream, you know how we go here. I want some breakfast though. I'm gonna go make me some food. Sorry for a dumb question. Where's the DD band in the platform? Oh, hi Max, what's up? Okay, so 2 places. Number 1 is DD band. If you click risk interval DD at the bottom right, where my mouse is, circling it here, you will get the DD numbers printed for you for any ticker that you put on this list. Okay, these give you the numbers. If you want them automated on a futures chart, you need futures data because it needs to draw them somewhere. And futures data, currently at this time, you can only get it with a connection through a broker. We have CQG and a few brokers connected to this. Edge Clear is the main one that we all pretty much use. You can click this, go through the steps. You open a brokerage account, then you get futures data. That's the way futures data is distributed pretty easily and cheaply at the stage of our development. So essentially you deposit $500 and they charge you $11 a month for the top of book, and then you get futures data. And once you're connected, futures data tunnels in. It will auto draw DD bands, and you'll also get the DD band alerts here. And that's it. So you gotta have futures data draw. Other than that, you can just manually get them from the chart. We upgraded everybody to Pro Plus, by the way. So Pro used to not have this when you did the extended trials and stuff. Now we upgraded everybody to where all extended trials get Pro Plus to make it nice and easy for y'all. Yes, sir, Max. No problem. Yeah, Kevin said he really liked my idea with eval accounts. Pass one, open another, and only trade live account with high confidence. Yeah. Have 3 or 4 backup evals, right? So you can blow up multiple times once you get funded one. Like have a couple of backups. And so if you wake up and there's a day and you're like, oh hell yeah, bull long up on hedge pressure to DD. This is your gimme trade. You go in on your eval, and this is just that gimme trade you're gonna make some money on, right? So it's just an easy setup. But what if you wake up and it's like, you know, like yesterday, some shit mean reversion, you're in the middle and there's hedge pressure here and you're like, man, it's like a gamble trade. I mean, all the signs point up, but I can only get like 8 points and my confidence is like 60%. Then throw that into a new eval and then work on the eval instead of risk it on your real account. Pass a couple evals, have one in the funded stage, have one as the backup. So if you lose the funded, you got another one there, and then you're working on a third one. At most, you'll have 3 going at one time. You'll have one dormant ready to go that you're going to convert to funded. It's past eval, but you're not paying the monthly to convert it yet until you need it. And then you got a funded one that you're trading for income. And then you have an eval that you can pass to replace the one in the middle when you have your off days or things are like kind of meh and you're like, ugh, I don't like this trade, or I don't like the confidence here. I still want to do something, but okay, we'll do it in the eval because there's no risk to that account. All right, back. Yeah. You passed 4 accounts right now. The strategy is mostly scalps and has a drawdown. You have to take profits to be quick. Works really well on choppy days or big pivot days. Very nice, very nice, very nice. Okay, guys, we're gonna call it. This is a simple, pretty easy, clean setup day. Not too much to talk about. Be sure you guys hit up the Rocket Scooter Discord. I'm gonna call it. Like, I didn't make any trades. I would have gone from here to here and closed it. I wouldn't short from there to there. I kind of leave it alone. Kind of be done with it. Little quick holiday stream. I know there's not really much else to say from here. I could sit here and talk your head off for an hour, and I know you guys love listening to me ramble on about whatever, but go spend some time with your families or have some time to yourself. You know, it's that day before Thanksgiving. Always has a cool feeling in the air, right? Lovely, just you can feel it, like the winter's coming and everybody's in a good mood, and you know, it's one of those great times to just kind of be introspective and spend some time to yourself and have a good time. Fuck this stock market shit. I mean, this is always going to be here, so go out and have some fun, relax, refresh. We'll see you guys on a Monday, right? Y'all are the best. Thanks for tuning in. Don't forget we have Black Friday stuff going on. 60% off a yearly, 20% off a lifetime. Get it before Friday. If you guys want to check out our platform, have all the data feed access, everything, all the tools, everything we do for life. 20% off. It's the biggest we ever do. It's popular every year. So many people do it. And then when we come out with all the new stuff in the future, you don't have to pay for anything, which is great. You get all of our stuff for free forever. No price raises either if you lock in that yearly, which is really nice. It's like normally $17.99 becomes like $900 something for a year, forever, for life. Love you guys. You have a good day.